Let's move on to the national economy now, and I'm joined by the economics editor of the Australian newspaper, Adam Crichton. Good to see you, Adam. Now, there's always been a lot of talk about with wages growth low, why are we bringing in so many migrants? Does this actually help keep wages low? Are we all paying a price for our high levels of immigration? Now, reports have suggested that is the case.
Yeah, certainly that's right. Look, it's basically wage growth in Australia fell off a cliff in 2012. It's been basically hovering around 2% ever since. At the same time, we've had an extraordinary increase in the number of temporary migrants in Australia. So 400,000 basically increase in between 2015 and 2018. And so the new research from Bob Birrell in Melbourne is basically, look, this is the reason, at least a large reason why wage growth has been so weak. I mean, there's one class of visa called the 485 visa. And in 3 years, the number of people on that visa have gone up 150% to I think 98,000, and these are people with full work rights. They're students who finish their degree, and they can work here for up to 2 years after their degree. And so naturally, this causes a lot of downward pressure on wages.
Bob Birrell is an expert. I know he's always argued against our high level of immigration. Presumably, companies are bringing in this labour because they can't find it here.
Well, look, I don't know if that's true. The unemployment rate is 5.3% at the moment and rising, so that suggests some slack in the labour force. Look, our net overseas migration is about 250,000 a year. That's extremely high. I mean, as a proportion of our population, it's 3 times the size of the US, for instance.
Wow.
And we see wage growth in the US much higher than here, also much higher in the UK as well, where they don't have the same level of immigration. So, look, I think he might be onto something, actually. I mean, I think we really do have to start looking at this as a cause of sluggish wage growth and also low productivity. I mean, his other point is if you're a business and you've got all of these workers, then why would you invest in kind of new machines, advanced technology? You just basically use more labour and cheap labour.
Scott Morrison, of course, has reduced the permanent migration intake by about 30,000, from 190,000 to 160,000. But you're saying this is largely temporary visas that's generating that.
That's right. Well, look, Bob Birrell called that actually window dressing. I mean, from an economic point of view, what matters are actually the people here. You know, whether they're permanent or temporary doesn't really matter. I mean, the population still grows. You know, they can still work, and of course, the increase in the temporary visas, if you like, is far greater than that 30,000. So the net overseas migration is actually unchanged, notwithstanding that change.
Now, where is the economy at the moment? Leading up to Christmas, people should be opening up their purses and wallets and spending freely. It's not happening. How concerned are we? I know Scott Morrison and Josh Friedberg are telling people that, you know, things are looking too bad, but obviously the consumer confidence is not high.
Well, certainly from the business point of view, we just heard this morning that business investment has fallen again for the 3rd time this year. So,
yet the stock market has broken a record.
Well, of course, the interesting thing there is that we heard this week from the Reserve Bank Governor, and he basically suggested, well, he tried to rule out QE, but most commentators actually interpreted it as increasing the likelihood of quantitative easing sometime next year. And so naturally, when that happens, when there's a prospect of lower interest rates, there's a bounce in the stock market, there's a bounce in asset prices. So I think that's why we saw the new record on the Australian stock market. Look, it's great if you're a share investor, but I think if you're an ordinary person, then you're worried about wage growth, you're worried about your household debt, which of course continues to increase, and maybe if you've been reading the news, you're worried about our exposure to China. I mean, our economy now is so exposed to the commodity cycle, it's extraordinary. I mean, at the moment it's great because the prices are high, but if something happened and the price of iron ore and coal fell, we'd be in a very bad way.
Well, something will happen. We know that, right?
Well, that's right.
We know that Chinese demand will fall off a cliff at some stage. We just hope that it's a long way off.
Well, that's right, because the exchange rate now, I mean, if we're not liking it now going overseas at 67 cents, we're certainly not going to be liking it at 55 cents, which we may be looking at some point.
So this is why, one of the reasons Tony Abbott and others, but Tony Abbott's been in India recently. He's speaking about China today, and I imagine he would have mentioned India because one of what he says he's going to devote his post-politics life to this issue, that is building up our relationship with India for all sorts of reasons, but prime among them so that we're not so dependent on China. If we can build up our two-way trade, in particular our exports to India, and that economy grows over time, then obviously it helps to hedge us against China.
Well, certainly that's a very sensible aspiration, but the reality is, the trade relationship with India is just so small compared with China. So we do have a very long way to go.
And India's got a long way to go to match China's economic weight, right?
That's right. I mean, it grows a lot more slowly, and look, it's so much further down the scale of economic development still than China is.
So where do you reckon we're headed? What's your outlook for the year ahead? At 2020, I figure that we've got lots happening in global politics. Brexit and the wash-up from the UK election, and then of course in the US there will be an election. So there's going to be a lot happening in global politics. But the way I see it in Australia, 2020 should be a fairly stable year for domestic politics. It should be all about the economy. What's going to happen? What can the government do to crank things along?
Well, certainly if strong population growth continues, that puts a floor under economic growth. So there's no risk that we'll ever have a technical recession in this country because of that. Look, I think the impact of those 3 interest rate cuts are still flowing through. So I think you're going to see a huge, basically a fairly rapid increase in house prices, especially in Sydney and Melbourne, which is already happening. And that will have some flow-through effect to confidence in the short term. But in the medium term, I think we still face big structural challenges. We have to reform the higher education system, we have to reform the tax system. I mean, the big issues are really not being dealt with by the Parliament. This week, for instance, we're looking at fairly marginal bills that change the governance of various institutions, but that's not going to shift the dial on productivity long term.
So you reckon the government needs, in particular Scott Morrison and Josh Frydenberg, need a productivity agenda to try and underwrite some more economic growth in the medium term?
Well, they do, and they've given speeches that say there's a problem. I mean, the Labor productivity growth for the past 2 years has actually been negative, which is really, really worrying. But in terms of actual concrete solutions to fix it, I mean, so far they've basically said, look, it's the state governments, they have to do a lot. Well, actually, some of the states are trying, but they need leadership from the Commonwealth. But I get the sense that this government doesn't want to do anything that is politically difficult.
Well, there's a new initiative announced yesterday, of course, with Josh Frydenberg with this seed funding, where the government's working with the major banks to create a fund that will come in and take equity in small businesses and help them grow. I spoke to a couple of people about this last night. It sounds terribly interventionist, the government getting involved in this, but they swear that in the UK and Canada this has worked very well.
Well, I mean, we don't know that for sure. Of course, those funds in the UK and Canada are large, but that doesn't really necessarily mean it's been effective. Of course, if a lot of government money goes into something, it's going to grow. If you're a small business, of course, you'd like to get some money from this. I mean, it's taxpayers' money. It's on concessionary terms. The question is it in the public interest to be spending this money? Look, I think it's a bad move. I mean, it's only $500 million to start with, so it's fairly small. But this is going to crowd out private investors. I mean, who's going to choose the businesses? I mean, it does kind of leave itself open to a little bit of corruption. And for instance, in the Canadian fund, the very first business the Canadian fund bought was a car smash repair firm. And I mean, what is the public interest of growing a domestic smash repair firm with public money?
I thought you might be a bit sceptical about this one because I certainly had
Westpac's involved.
Westpac's.
I mean, we've just been slamming Westpac, and then also going into business with them.
Well, we worry about governments picking winners. This is exactly what this is, a government and private fund. Its job is to try and pick winners. And of course, we know, history tells us, it'll pick some losers.
And also, too, there's absolutely no shortage of capital. I mean, the superannuation industry has about $2.9 trillion in it. I mean, the growth of credit has been extraordinary. So there's no shortage of funds. And look, I mean, if the private sector aren't investing in these smaller firms, maybe there's a reason for that. Maybe they aren't good firms.
All right, just finally, Westpac, more to go, more directors to go, more executives to go?
Well, look, not only Westpac, but you have to think the other 2 major banks that so far haven't been caught up in the AUSTRAC stuff. Like there've been 53,000 cases at CBA, there's been 23 million at Westpac. You might start to think, that there've been a few transgressions at the other majors as well. So it wouldn't surprise me if in the next 6 months there are more charges emerge.
You heard it first, a prediction there from Adam Crichton. Thanks for joining us, mate.
Thanks.